Welcome to Nasdaq TradeTalks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We're coming to you live from the Singapore FinTech Festival, and joining me for this segment, we have Ronak Daya. He's head of product at Paxos. We're here to discuss the next wave of stablecoin adoption. Ronak, it's great to have you with us. Welcome to TradeTalks.
Great to be here.
All right, some big Paxos news to share. Tell us what's going on, what's recent?
We just announced a new stablecoin called USDG and a network called Global Dollar Network that is designed to foster adoption and growth with enterprises. The thesis is that stablecoins are the next wave of money movement and digital payments, and today stablecoins don't align incentives with enterprises, don't provide the right regulatory sort of protections or the experience needed for the next wave of adoption of actual money movement, and we designed a stablecoin that is regulated under the MAS's upcoming prudential regulation of stablecoin issuance, and combine that with a network of some of the largest players in the space, including Kraken, Anchorage, Nuvei, Robinhood, and others to the table, such that we're incentivizing and rewarding adoption of stablecoins.
So is that really what this product network, how it differentiates itself compared to other leading stablecoins today?
That's right. So, the asset itself, the stablecoin, is differentiated in the fact that it's issued by Paxos and regulated under MAS's new upcoming regulation. But the sort of true differentiation is that today's stablecoins don't provide any of the economics back to the distributors who are driving adoption of the stablecoin. And so we've upended that model by taking the underlying incentives and reserves and the economics of the stablecoin and passing it to the distribution partners who enable the growth of the asset. So if you hold the asset as a distributor or drive adoption through minting or accepting for payments, you get rewarded for it. And it's an open network that any business can join.
Right, so why do you think this will appeal to institutions then, in addition to the economics behind it?
Yeah, I think the sort of necessary factors for broad stablecoin adoption, in my mind, are user experience, which starting to come together.
Yes.
But user experience from an enterprise perspective comes from the fact that they also need the associated infrastructure, and Paxos provides that infrastructure. That's one. Two, you need trust in it, and trust comes from working with proven players like Paxos, but also comes from having prudential oversight on the asset. And so we've put together the trust through our through the prudential regulator like MAS and working with banking partners like DBS. We bring the user experience and combining the benefits of stablecoin with the Paxos platform, and we've aligned incentives. That's the third most important piece, or like one of the three most important pieces, which is the alignment of incentives. Paxos takes a simple asset management fee, and we're passing more than 95% of the economics back to the network, which is unlike any other stablecoin model in the market today.
Right, so how does that benefit Paxos then, if you're passing along almost 95%?
We believe that the long-term model for economics of stablecoins should be similar to the asset managers of the world today.
Right.
And so we charge 30 bips today, 30 to 40 bips on the economics of the reserve. We do the issuance and we manage the reserves and we charge a fee for it, but we're passing the rest of it back because we believe that as stablecoins grow in the market, our infrastructure gets leveraged and the asset value grows, and the 30 to 40 bips more than compensates for the value that we bring to the table.
All right, appreciate the insight. Thanks for joining us on TradeTalks.
Thank you so much.
And thanks for joining me from the Singapore FinTech Fest. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.